Good evening, everyone. Mo Harrington here. I am the Assistant Director of Development at ACR Health, and we are welcoming you to the 23rd Annual Hike for Life. We are celebrating 23 years and 23 days by giving you, the community, a extended look at all of the services and all of the resources that we have in the community, and reintroducing you to our agency as well. Tonight, I am really proud and really excited about bringing our guest to you tonight. I've known this gentleman for a while, and I've worked with this agency myself personally through ACR Health for the past 10 years. And so it gives me great pleasure to introduce Mr. Andrew McLean, who is the Business Development Officer at Empower Federal Credit Union. Andrew, welcome to tonight, and thank you. We're really looking forward to this presentation that you're going to be doing tonight on something that's very, very important, I think, to all of us, especially when we talk about health, because I do think that having great credit and being able to feel good about money and feeling good about your credit is also related to good health.
Yeah, thank you very much for having me, Maureen. And thank you for ACR Health for inviting me to the 23rd Annual Hike for Life. We've had a great partnership with ACR Health for the last 20 years. I have not been with Empower Federal Credit Union for the last 20 years, but certainly welcome this opportunity and a great partnership. I mean, ACR Health really does great work for our community, and we're looking forward to continuing that partnership as well. You know, you had mentioned the creditability presentation that we're about to have, and it really, I mean, I think credit, for a lot of people is a very emotional financial record for people, because it affects a lot of things in people's lives. It affects, employment. A lot of employers check credit for people. It affects, if you're renting a house or renting an apartment, landlords will typically, check your credit. And then, certainly if you're looking to borrow money, that certainly affects that. So from a financial wellness standpoint, I think this fits very well into the Wellness Summit for ACR Health and their Hike for Life. So I'm excited to be here.
It's really interesting because we send so many of our clients to Empower, just basically even for things like education, right? People that are just starting out, especially our youth in our Q Center, which you guys are huge supporters of. I also do want to spend just a little bit of time talking about all of the other amazing things that you have done personally with ACR Health. So I like to tell the story when I'm talking about you to anybody. I like to tell the story of the ice cream truck. So every summer we have this ice cream truck that comes to us from Empower Federal Credit Union. And the woman who owned the ice cream truck had a conversation with you about ACR Health. And she actually ended up contacting us shortly after that and getting involved with our Sled for Red event, which is our cardboard sledding derby that you guys also sponsor for us. And it is a lot of fun. And she made this enormous ice cream truck out of cardboard, duct tape, and paint. And she won an award. So it was really great. Now, I probably shouldn't tell you that she won the slowest sled award, but it was an award nonetheless. So we were really, really happy about that for her.
So,
and I also, what's up?
Sorry, yeah, I don't even mean to interrupt you, but so a great story about that. So I had watched the Sled for Red event and saw the cruising cones sled come down, and it was a classic Sled for Red event. But so I sent the folks at Cruising Cones a message saying, hey, great job, great cause, excited to see you guys joined. And she had said, it was great, the introduction with the ACR Health, and we had a blast. So then, fast forward a couple months, she sent me a picture of the the trophy that she got for the slowest sled for red event or sled for red sled, but they had a blast. So it was great. That's a great introduction and a great cause as well. So,
well, I got to tell you, she came down that hill and I was surprised. I mean, because she landed on her head a couple of times. So the fact that they actually crossed the finish line made us very, very happy. We're very relieved when that finally happened. But, you know, those kinds of connections are what we have come to expect in our agency from Empower. It's not just a bank. It's not just a corporation. You know, you have really kind of entered our agency as more of a family member. You have, you know, personally been on board and read for the World AIDS Day event. And that's a very special thing. That is our World AIDS Day event is where this agency actually started more than 37 years ago. And so, you know, there's a lot of companies that wouldn't necessarily do that. And yet you took that on and you made it personal, and you were there for us and therefore the clients that we serve. And so things like that, you know, the longstanding history that you have with this agency is not just about being a sponsor. It's about really inundating yourself within our culture and getting to know the people that work here and getting to know the clients and what they need out of their own experience and their own banking experience and how they can feel better about their own health. So I want to thank you, but I think our entire agency wants to thank you. And so we made a little video for you, and we have a message from our acting executive director, Marissa Rice. So we hope you enjoy it.
Hi, I'm Marissa Rice, the Acting Executive Director for ACR Health, and we would like to thank Empower Federal Credit Union for 20 years of support of our organization and the community that we serve. 2021 marks 20 historic years of partnership between ACR Health and Empower Federal Credit Union, 20 years of support of our programs and commitment to our community. Leading that charge and that commitment, Empower has invested more than $190,000 in our agency, which has raised $4.2 million for clients and youth in 14 counties in upstate New York. That is an investment that we can all believe in. Our relationship with Empower has forged additional partnerships, leading stewardship and increasing our donor platform. Their education programs have increased financial wellness with workshops for our youth who are just starting out and our clients who are starting over. Thank you for the belief in our agency and your successful investment in this year's Hike for Life and the AIDS Walk for Run. These events promote and ensure a healthy community for all.
That's great, Maureen. We certainly appreciate that video and the thanks. You know, I think you had mentioned, you know, we're not just more than a bank or a corporation, because we are, you know, we're neither of those. We're really a, you know, a non-for-profit or not-for-profit, you know, credit union that serves the community in which we live and work. And we really are committed to that, and certainly will continue to do that. So thank you very much for that.
You are welcome. And thank you for everything that you do for us and for the entire community. We really appreciate it. The connections that you've made for us have gone far beyond what we could have imagined. And so we love the investment in the community that you make and the investment in all of your clients as well. I want to talk to you. We're going to make a little switch here because I want to talk to you about what you do. So as a business development officer, I know that, you know, you work with a lot of agencies in town, but when it comes to your work with Empower, what is it that you do specifically, and who is coming to see you? What kind of clients are coming to see you? Who's calling Andrew?
Yeah, thank you very much for that. So we partner with local businesses, agencies across the central New York and even outlying outer market areas that so Empower is not open to the general public, so we need to have eligibility for people. So we again partner with local businesses and agencies to gain eligibility for their employees. So and then with that, not just eligibility for their employees, but we also offer a lot of different services with that. So we offer financial counseling, we offer lunch and learns, overviews of Empower Federal Credit Union. So there's a lot of benefits that come along with that, and really, I mean, we're the largest credit union in upstate New York. We again partner with a lot of different companies and agencies. So we really try to garner that partnership with those companies to have their employees be able to avail themselves to all the products and services that Empower has to offer.
Your services are varied. I mean, mortgages and cars and, all kinds of things so that people can actually start living their lives to their fullest advantage. I just want to say one of the services that we absolutely love that you do is your education pieces, your lunch and learns, coming in and teaching our youth, especially how to, open up from anything from opening up a bank account to kind of improving your credit, which is what we're going to talk about tonight, because it's so important to have just credit, right? I mean, just to get credit. So can you, how would you start the conversation with someone coming in who said, my credit's kind of, how do I fix it?
Yeah, that's a great question. And William and I were talking before we started the video tonight that, as he as well as I, as a youth, did not really understand credit or what that meant for a long-term effect on what you're doing. So, if you're just starting out with credit, it's probably one of the most important financial reports in your adult life. So, to have good credit is important. A lot of people might have good credit to start with or have no credit to start with. But to build that up for the future stuff that we talked about, like, employment or, renting a place or loans, that's certainly going to be important. And I think, a good example of that, my son, he graduated from high school last year, and he's not looking to borrow money anytime soon, but he is going to eventually. So, we hooked him up with Empower, and he was already an Empower member, but he got a secured credit card to start building up that credit. So again, I think that credit history is an important piece to what you do in life, and really Empower. We are a story-based lender, so or storybook lender. So we really, take into consideration what people have going on in their lives. And I think because our members are owners, we're a not-for-profit organization. We really, like another financial the whole picture. So we really want to make sure that we are looking out for our members' best interests. So with that piece, we make sure that we take advantage of that.
Well, as one of your members, I really appreciate that. So thank you so much. All right. So I know we've got a great presentation about credit called Creditability. I think I got that word right. And then I, of course, have a lot of questions because I know I just bought a big purchase in my life, and and the word credit came up a lot. So I do have a lot of questions for you, and I also have a young daughter. So there's tons of information to know, but let's start by watching this presentation that you have brought us tonight.
Great.
Hello, my name is Andy McLean and I'm with Empower Federal Credit Union. A little bit of background on Empower is that we are a full service financial cooperative and a not-for-profit institution. Empower is member owned and our members take part in our ownership, our operations, and most importantly, our profitability. In 2020, we gave back $4 million to our members. And although future givebacks are not a guarantee, we have given back $39.5 million over the last 13 years to our members. I want to thank ACR Health for inviting me to present at the 23rd Annual Hike for Life Wellness Summit. 2021 marks the 20th year Empower has been a supporter and partner with ACR Health and the important work they do in our community. So wellness can take many forms, whether it be physical health, mental health, or financial wellness. Today, we're going to talk about financial wellness as it relates to your credit and how that affects your financial health. So I'm going to share my screen here with you. And we'll get our PowerPoint presentation started here. Okay, so this seminar typically is participatory or interactive. We're not able to do that today, obviously, but at the end of the seminar, I'll have my information up on the screen and anybody can reach out to me if they have any questions. We can go from there. So this seminar is really geared towards individuals and families who want to build a solid credit history. You might just be starting out. You may be here because you've experienced some difficulty with your credit in the past, or maybe you just want to start over and rebuild. Or lastly, maybe you just want to stay on track. And certainly a world that's becoming more increasingly complex from a financial standpoint. So the seminar's objectives. What we're going to do today is learn who needs to build good credit and why, the significance of a good credit report, how to establish good credit, how to rebuild a good credit history, tips for using credit wisely, pitfalls that are going to cost you plenty if you fall into those, and then your rights and responsibilities with your credit reporting. So we'll start by saying what's in a credit report. So one of the most important financial documents about your credit or about you is your credit report, which is essentially a record of your bill paying history. One thing to note that positive information can stay in your credit report forever, or negative information, if it's accurate, can stay on your credit report for up to 7 years or 10 years in the case of a Chapter 7 bankruptcy. You know, if you're applying for a loan, such as a car loan or mortgage, one thing to note, that requests from auto dealers or lenders within a short period of time are considered one inquiry. So, you know, they don't penalize you for shopping around. What's in a credit report? There's going to be your identifying information, your name, social security number, date of birth, your employment history, creditors and payment history, bankruptcies, judgment, liens, and lawsuits, and then inquiries that we just talked about that you've initiated. And those are going to be loan and credit applications, but not credit card solicitations. So again, inquiries that you don't initiate, such as pre-approved credit offers, will appear on your credit report that you order, but they won't appear on credit reports that potential lenders view. And obviously, if that's not the case, they won't affect your credit score. So not all credit reports look alike, but they all contain the same information listed on this side. So one thing that you always want to do is make sure you check the information in your credit report for accuracy to make sure that is correct. So what is a credit score? Bottom line, the higher your score, the better. So it's a number that represents your credit worthiness. It's going to change over time depending on payment history, and essentially just asks the question, how likely are you to repay the loan? So there's a couple different credit reporting agencies out there, credit scores out there. There's the FICO score, and then there's the Vantage score. The FICO score, the range is anywhere from 300 to 850, and the Vantage score is anywhere from 500 to 990. So you really want to make sure you know which score you're looking at before you identify how well you're doing with your credit. Because if you have, say, a 750 on your FICO score, that's a very good score. If you have a 750 on your Vantage score, that's kind of middle of the road. It's, you know, they kind of grade that as a C. So again, just making sure you know which score you're looking at. You can order your scores from the big three. Those are Experian, Equifax, and TransUnion. And the website is right there that you can order those from. So I think just, you know, an opportunity to build good credit is important for anybody, or have good credit is important for anybody. With a, you know, if you have a good score, and a good score is typically 720 or higher, the difference on an interest rate offered to a person with a score of 520 versus a person with a 720 is about 3.45 percentage points. And that's according to Fair Isaac's website. So in that example, somebody with a 720 score versus a 520 score, they take a $100,000 mortgage out on a 30-year mortgage. The difference would cost more than $85,000 in extra interest charges, according to bankersrate.com's mortgage calculator. The difference in those monthly payments alone would be about $235. So again, there's big numbers out there when it comes to your credit savings. So let's talk about why build good credit. In credit is certainly an emotional report, just because I think it affects so many things in your life as an adult. It's going to affect the image and eyes of lenders that might be lending you money. It's going to affect your landlord's decision to potentially rent you an apartment or a house. Potential employers sometimes take a look at credit, and then insurance companies take a look at credit to assess risk. It will also affect your ability to get credit. So again, going back to that example we used, that your credit, the lower your interest rate on loans and other forms of credit, the better off you're going to be to save. It's also obviously the ability to get credit for loans, insurance, or credit cards. So again, always important to try to have good credit. The cost of a poor credit history. Here's going to be another example. This is going to be on an auto loan. It's going to be a $14,000 auto loan for 48 months. So again, the best ways to explain why it's important to have good credit history is to explain how much it costs to have poor credit history. So in this example, somebody with good credit gets a 5% interest rate, and that's going to also vary depending on where you go. That monthly payment's going to be $323, and the total paid on that $14,000 car is going to be $15,504. Someone with poor credit is going to receive a 14% interest rate. They're going to pay $383, and they're going to pay $18,384 on that same $14,000 car. So that person with poor credit paid almost $3,000 more for the same car. You might look at that and say, well, $60 per month, that's not a deal breaker for me. But again, that $3,000 is a lot bigger than $60. It certainly adds up over time. So again, having good credit, here's an illustration of that. So what doesn't affect my credit score? Debt ratio does not affect your credit score. That's essentially your total debts divided by your total assets. Your income does not affect your credit score. Your length of residence does not affect your credit score. Your length of employment does not affect your credit score. We talked about your employment history being on the report, but not the length of employment. And then also your assets will not affect your credit score. So while these factors, may affect the lending decision, they do not affect your credit score. So your components of your FICO credit score. So knowing what affects your credit score will definitely help you take steps to improve it. For example, if you paid some bills late, know that they can negatively affect your credit score. With those things, you may want to mail your bills a few days early. You may want to set up auto pay for bills or pay your bills online. The auto pay you can do directly from your checking account if it's the same amount each month. Remember also too that having no credit history at all can sometimes be just as bad as having a poor bill paying history. Establishing your credit in your name and paying bills on time is certainly a big part of that. Going back up top, so the payment history, that's going to make up 35% of your score. And again, always paying on time. We're going to talk about that a few times because obviously payment history making up 35% is a big part of that, and paying on time is an essential part of that. Amounts owed to creditors makes up 30%, and that's essentially going to be your capacity of what your credit is. So a good capacity is about 30%. So you want to keep your capacity at 30%. The length of credit history, so how many years of experience you've had credit, is 15%. New credit is going to be 10%. And that kind of relates back to those inquiries. So if people are running your credit report multiple times, that's going to have an effect. Not as big as an effect, obviously, as some of the ones above it, but certainly has an effect. And then the types of credit currently in use is 10%. And you kind of want to have a healthy mix. And what do I mean by healthy mix? That may include a mortgage, credit card or two, maybe a personal loan, like a car loan, or a retail card. So having a mix of credit affects or are components of your credit score, your FICO credit score. So credit report record retention. So how long does derogatory credit remain on your report? In terms of bankruptcy, it's going to be 10 years from discharge date noted in lawsuits. Paid lien tax judgments are going to be 7 years from the date of entry. Credit inquiries that we talked about, those are going to remain on your credit file for 2 years. So as new ones are added, those that have reached 2 years are removed. So this is kind of a shocking slide. Kind of going back to that pay on time mantra. It takes 24 months to restore credit with one late payment. That score or your score could drop as much as 60 to 70 points with one late payment that is received by a creditor 30 days after the due date. Mortgages would be a little bit higher at about 121 points. So another good example of making sure you're paying on time. So tips for using credit cards wisely. So having that piece of plastic in your wallet is very convenient, but it does require some responsibility on your part. And one other thing to take note too, if you apply for a credit card and you have it, but you don't use it, that's not going to help your credit history either. You need to use that to create good credit history and pay it off each month. So one thing I think is a good it's best practice with credit cards, and it's certainly easier said than done, but kind of using it similar to a debit card where just paying what you have money to pay off. So, or charging what you have money to pay off. So if you don't have the money saved or don't have the money available, don't charge it. Again, it's easier said than done. Things come up that are out of our control, but that's a good best practice to utilize to make sure you're able to pay that off in time. So some tips for using credit wisely. Charging small amounts, again, paying on time, paying in full. or more than the minimum amount that they have on the credit cards, and we'll talk a little bit more about that. Avoid the minimum payment trap. Again, we'll talk about that. Not maxing out your credit cards, that's going to affect your capacity. So if you have a credit limit of $1,000 on your credit card, you don't want to max that out because that's going to impact your capacity. Again, you want to have that kind of about 30% we talked about. Avoid late and over the limit fees. Avoid cash advances. Again, those are convenient, but on the same token, that interest starts, the day you take that cash advance as opposed to at the end of the month, so that can be costly. And then not opening up a flurry of accounts. Again, that's going to affect inquiries with your credits. So you want to be careful with that. So what does the minimum payment trap actually cost you? So one of the worst ways to use credit cards is charging a lot of purchases and only making a minimum payment. Why is that? Because you're paying the maximum in interest. So we'll use this example here. Somebody has $2,000 on their credit card. Their payment option is they're going to do the minimum balance, which is going to be 4% of declining balance, which is going to be $80 to start. So that's going to take them 9.5 years to pay off that amount owed. The interest cost on that is going to be $1,116. The actual cost on that $2,000 owed is going to be $3,116. The same scenario with a different payment option, $2,000. You have this person is going to put in their budget that they're going to pay $100 per month on that amount owed. That's only going to take them 2 years to pay off. The interest costs are going to be a lot less at $396. And again, the actual cost is going to be $2,396 with a savings of $720. So you always really want to pay more than the minimum if possible. And again, only charging as much as you can afford to pay in full when the statement is due. Again, easier said than done, but a great best practice. So some of the warning signs to know that you may be over your head in debt. One, you're only making minimum payments. You're at or near credit card limits. You don't know how much you owe. You really want to make sure you have a good handle on your debt. Using cash advances to pay other bills, that's definitely a warning sign. You're being denied credit or denied credit purchases with your credit card. You're getting calls from collection agencies, maybe lying to family members about spending, or more of your total income is going towards your debt. So those are certainly going to be warning signs if you have too much debt incurred. So some of the pitfalls that can affect your credit score. The first one is credit repair clinics. So you really want to stay clear of any advertisement that claims to erase your bad credit history. You can't erase history. So they may be able to temporarily hide some negative information on your credit report, but really be prepared for that to show up again. The rent to own, you want to try to steer clear of the rent to own. They're certainly convenient, but they're going to result in payments that are a total of 2 to 3 times or more of what that item is worth. And there's really no guarantee that those goods are new. Sometimes they may have been repossessed or bought used. In terms of pawn shops, you won't be offered anywhere close to the value of those. So you want to value of your objects. So you really want to try to steer clear of those. High interest debt consolidation. So consolidating your debts into one high interest loan certainly may streamline your payments, but the higher interest rate in exchange for that one payment means you're paying more than you were before. So check with your credit union first and ask about rates. Empower has financial counselors that we offer at no charge to our members that do a great job with that. In any consolidation, you really want to include debts with interest rates that are higher than the interest rate you're getting from the consolidation. Don't include those low interest debt. Keep those separate. In terms of debt settlement as well, It's really a process to settle outstanding debts with creditors. So you or a third party negotiates with your creditors for a reduced amount. Usually those range anywhere from 40 to 60% that you're going to agree to pay. So debt settlements will remain on your credit record for 7 to 10 years, and you can possibly lower your credit score. The other thing to note too is you will owe income tax on the amount discounted. So, if you settle for 60% on the dollar, you're going to owe income tax on that 40 cents on the dollar. In terms of temptation from credit officers, a good way to prevent that is to get off pre-screened credit solicitations, insurance offers. The number there, you can call to opt out, or you can visit the website on the presentation. Identity theft is another big thing that can affect your credit. There's a few different ways the crooks or bad guys out there use identity theft. There's phishing, which is done by con artists who attempt to lure victims via fake email messages. That's going to be through a fraudulent website, kind of maybe through spam. What it does is attempts to trick the victims into divulging personal information when they do that. Vishing, that's more phone related. It's a pre-recorded message rather than clicking on a link. I'm sure a lot of you out there have gotten those pre-recorded phone messages, but you're asked, to verify your account information by calling another number, and then you're asked by another message to punch in your 16-digit account numbers, and that's obviously a pitfall we want to stay away from. And then lastly, farming. That's a little bit more sophisticated scam that's harder to detect, but what it does is it redirects your browser to an illegitimate website where your login, password, and personal information is captured by crooks. So you want to be, careful of that. The con artists are getting more and more sophisticated out there, so you really want to be careful of giving out any of your own personal information. So your rights and responsibilities when it comes to credit. The FACT Act, which is the Fair and Accurate Credit Transaction Act of 2003, that was enacted to help consumers understand their rights and protect their information. The FACT Act allows consumers to require one credit report, 3 per year, from each of the three main credit reporting agencies. We talked about those earlier. That's Experian, Equifax, and TransUnion. One thing you always want to do too is if you refuse credit, ask why. One, you want to make sure it's not discriminatory, and then two, if it's not, making sure you're working on those areas that you were denied for. So, and then also two, contacting creditors to work out a repayment plan. So if you owe people money and you're in debt with those, contacting creditors to repay that. So from time to time, your credit reports may have errors. So it contains instructions when you get your credit report to dispute any information on your file that you think is inaccurate. So the first thing, if you find something inaccurate, is to write a letter to the credit bureau explaining why you think the information is inaccurate. The credit bureau then has 30 days to investigate. It'll notify you of the results and then delete inaccurate or unverifiable information for you. However, if you disagree with the investigation results, if they say, nope, that's correct, you can always write a dispute statement to appear in your credit file. That way, when anybody pulls your credit, they're going to see that dispute statement. So I do have some of those available. If anybody does want to reach out to me, I can give you sample letters if anybody wants one of those. So how to order your credit. The website on there, theannualcreditreport.com, is a way to order your credit. You can also mail a request letter to any of the big 3 credit bureaus, or you can call the number listed on the screen there. So the phone numbers for each individual credit reporting agency are on the screen there as well. And like I mentioned before, you're going to receive one free free credit from each bureau per year. I think one best practice to do that with, since you receive one per year from each of the three, is stagger those out. If you do them all in 1 month, they're all going to have the same information. But if you stagger those out, you're going to be able to look at those throughout the year. So maybe do one in January, one in May, and then one in September, and just repeat those. Again, it's really important to take a look at your credit. There's with identity theft out there, you might not even know somebody's opened up credit card in your name because they're having the mail sent somewhere else. So, identifying that information on the credit report is really the best way to do that. Other resources that are available for credit and information on your credit are listed there on the screen. I'll leave this up for a little bit here. Again, making sure knowing what's on your credit report is a big part of having a good credit score. So another resource, if you're a member of Empower, that we have is something that's called My Credit. On our mobile app, if you upload the application, you're able to check your credit at any time. It's a soft inquiry, so it does not count for it as an inquiry on your credit, but you're able to check your credit at any time. You're able to, what it also does is it monitors your credit. It also gives you a grade for each of the 5 things that affect your credit. So maybe if you have an A in payment history, but a B in capacity, it'll tell you that, but more importantly, it'll also give you ideas on how to improve that or how to keep that high. So a great resource for members of Empower that we offer free to all of our membership. So another thing, that you want to take note, we talked a little bit about today, credit is kind of a catch-22. If you're trying to build up your credit or build back your credit, how do you do that if no one's able to give you credit because of your credit history? So we talked about a lot of the things that they're going to help that. First and foremost, again, checking your credit report, knowing what's on there. If there is inaccurate information, you want to dispute that. We talked a few times today and about paying bills on time. Your payment history makes up 35% of your credit score. So you really want to make sure you pay your bills on time. Try to avoid that minimum payment trap as well. Again, sometimes easier said than done, but paying your bills on time and trying to avoid that is a best practice. Catching up on overdue bills. We talked about contacting creditors to do a payment plan if you have outstanding bills out there. Also, secured credit cards. It's a good way to build credit history. Really, what it is you put down a deposit. You can get that if you're employed. And then you can use that credit card as a regular credit card and build up your payment history or build back your payment history. So that's a good option if you're unable to get an unsecured credit card. So that wraps up the seminar. I'll leave this screen up here for anybody. It has my email address, which is amclain@empowerfcu.com, or my phone number is 315-728-5202. You can certainly reach out if you do have any questions. I appreciate everybody listening and tuning in today. I appreciate ACR Health for inviting me to participate as well. And I'm sure the rest of their wellness summit will go fantastic. Thank you and have a great day.
Now, Andy, you didn't think we were just going to let you go after that, right?
No, not at all. Not at all.
Yeah, because I got to tell you, the minimum payment trap slide was scarier than any horror movie I have ever seen.
Isn't that crazy? It's unbelievable.
Yeah, we need to just a minute, because I think that if you were young and you saw that at the age of 17 or 18 years old, it just reminds me that I think that the financial education should be a part of anyone's high school education. because it's that important. It is that important to see those things so that you do not make those mistakes.
Well, and it's so funny you say that, Maureen, because I think, I talked about, William and I were talking about, not having any education on that earlier. And, I mean, if you don't know that information, it's could be seriously detrimental to your financial wellness. And, I mean, all these colleges or even high schools, you get all these, offers from different credit card companies, and all of a sudden, yeah, I'm going to sign up, but you're at a 25% interest rate and things like that. So there's definitely a cautionary tale there for sure.
Yeah, and I also want to point this out. I remember coming to Empower Federal Credit Union for a loan, and it was one of the only banks that didn't ask me for a man to co-sign on my loan. And I just want to tell you, it was, I mean, and I'm 59 years old. And, as a single woman, that is a big deal, because I take care of my bills. But there are a lot of, I know, financial, institutions that require that second signature from, I don't know who, some imaginary person in the sky that I'm just going to bring down. So I just wanted to say thank you for that. I have a question about those kinds of credit check places like Equifax and like Credit Karma, things like that. Are those good to have, like, even on your, I know you can have them on your cell phone and just check your credit score, weekly or monthly?
So yeah, that's a great question, because they are good. I mean, Credit Karma, Equifax, they're good, platforms to be able to check your credit. I think the challenge with those is they really inundate you with a lot of, promotions and ads and stuff like that. So it's good to know they're all soft inquiries. They're not, creating an inquiry on your credit. So that's good. The nice thing about the Empower app, and I'll plug for Empower, that that application with Empower there's no, ads or promotional materials or anything like that they're going to send you. So those are good, but Empower's got the best ones, so with my credit.
And the My Credit is available if you have an account at Empower. The My Credit is available right online.
Yes, yep, you can upload that application right on your mobile app, and again, soft inquiry, and you can see what your credit is at any given time. And then again, it gives you the information on the things that affect your credit score. More importantly, how you can improve upon that. So
it doesn't matter if you check your credit 3 times a day or once a month.
Not with the My Credit app, yes.
Okay, that's amazing. That's good to know. I am going to, because I feel like I have been hogging all of your time and your expertise, Andrew, I'm going to open up the phone call to any one of our guests, if anybody else has any questions to ask.
I do. I think you covered. I was thinking about when my stepdaughter, the secured versus unsecured, and I think you covered that. So I put about $500, and I said, "This is your credit limit. You need to keep putting that money in." And then she didn't, and then consequently, as you said, they just bombard them with cards when they went to school, and she just ran them all up. So and then we have talked, I showed her some of the graphs of what you spoke about with the minimum payments, and I said, you'll pay this thing forever, and the interest rates are really high. One of the things I wanted to ask you about was, so if somebody comes to Empower,
Yeah, very nice, Paul.
as I do, But the PMI, you know, the 20% down and the value of that, because the private mortgage insurance, right? Principal and interest, mortgage insurance. I don't think people understand that well of, it's not my insurance, it's the bank's insurance, my lender's insurance. And I think isn't it about, if you don't put 20% down, isn't it like, I know it varies, but isn't it between like a 0.5% and maybe almost 2% of the total value of the mortgage?
Yeah, that's a great question, Paul. So I am, in full disclosure, I am not a mortgage lender, so
Yeah.
I do not know the answer to that specifically. But you know, that's a great thing about Empower is we offer financial counselors at no
Yeah.
charge to all our members, that they're able to sit down with somebody and talk about any of their stuff, whether it be credit or, you know, budgeting or, you know, loans like a mortgage. So I don't want to speak out of turn, so I will not be able to answer that. So,
Yeah.
but I think, you know, it's a great question for, in terms of, you know, somebody starting out.
Yeah, and I bring that up because I used to work for Chrysler here, it's local, and we had the MPG credit union
Oh yeah,
that became Empower.
yeah.
So a lot of my former coworkers and friends all belong to Empower.
With new process here.
Yeah, the process care. And so this came up recently where somebody went to get a loan and they weren't going to quite put 20% down. And but the mortgage person that they were dealing with at Empower just said, you know, if you can, it wasn't a huge difference of what they were going to put down to get over that threshold. And that's, you know, they were showing them, because you're paying, you're not really getting anything back from it. It's just protecting the lender. And I don't know if you would have went to, you know, Chase or Bank of America if they would have done it. That's why I brought that up.
Well, yeah, thank you for that, Paul, because I think, again, you know, we're member owned, you know, so we are always looking out for the best interest for our lenders, so, or our members. So, you know, we're always going to do the best thing for them. So,
Great.
pointing that out is a great point.
Yep.
Anybody else? Any other questions?
I have a question.
Jennifer?
What would you say, one of the things that trying to help our kids to be money conscious, because my husband and I were the victims of those doggone pre-approved, you know, you want it, you gotta get it, we like you, and sure, I'll get that department card, hey, I'll get that credit card. That took us a while to get things in order for ourselves. So we've been trying to not trying to help our kids not to fall into those same kinds of traps. But with my oldest son, we found that we actually hindered him because he didn't have any debt. He didn't have any credit. If you don't have cash, you don't need it. You know, if you want it, save your money and pay the cash. And then when he tried to start doing things, it was, oh, you don't have good credit history. You know, you don't have enough credit history. You know, that was like the biggest issue for him. So one of the things, and I have another son that's in college, and one of the parents, or another parent, had told me that I should look into a low amount credit card for my student. And I wanted to know if Empower had anything like that, because she said that I don't know where she banks, but she had like Paul was saying, like a $500 card that actually her daughter is doing pretty good with managing with her work study and actually being able to pay it off, because she had a rule of, you don't have a job, you can't have a card. How are you going to pay for money that you're spending, kind of thing. And I was like, oh, that's a pretty good idea. But then, I got this little voice in the back of my head that says, he's only 18, he's only 19, he's got a little bit of time. But I then don't want him to also fall into that, you don't have enough credit, you're not good enough to get a card from us, kind of thing that happened with my other son. So that's two questions. Do you think it's a good idea to have that kind of credit card with that kind of balance? And does Empower offer anything that would be specific to students, maybe?
Yeah, that's a great question, Jennifer. And my family is in the exact same situation you are. My son graduated from high school. He is in college. He's not looking to borrow money anytime soon, but he has no credit history. So he got a secured credit card. So I think we talked a little about that in the video, but the secured credit card, really, you just put down a down payment. So say, $200 on a credit card, and that money has to stay on there, but then you can pay off that credit card, monthly. You can, if you charge money, you pay off that credit card monthly and build up that payment history, which is a huge part of your credit scores. So I would encourage that.
Yeah, so I think it was 35%.
Yeah, so Empower is not 35%. So and that's where that trap falls in, because it's ironic, because lesson learned, when I was in college, I got one of those, pre-approved credit cards. Hey, you're good to go. Let me give you a credit card. And it was a lot of percentages for the interest rate. So lesson learned. But yeah, I mean, I think, again, you really treat that as, teaching your children to treat that as a kind of like a debit card, where, only, like you said, only charge what you have money for. And you can, pay it off the next day, or you can pay it off at the end of the month, but you're building that credit history, your payment history, to build up your credit. So I think it's a good idea, as long as you use it responsibly. Again, that piece of plastic in your, wallet is a great thing to have, but it comes with some responsibility.
Yes. Yeah.
It's a great question, though.
Anyone else? Questions? Okay, I do have one question. Let's see, from someone. What happens to someone that uses no credit cards for a long time, like 25 years?
So I think there's a couple different answers to that. If you keep those credit cards opened, that's still in your capacity. We talked about the capacity piece. So if you have, a few credit cards that you have $1,000 capacity, you still have that in your credit history, and that's part of your capacity. So I think a lot of people think, well, if I'm not using this credit card, I'll just cancel it. But that reduces your capacity. So it's not going to hurt you if you're not using those credit cards in terms of your capacity, but it won't help you build your credit history, because you're not using that for your payment history, if that makes sense.
It does. It does make sense. Andrew, I am so sorry to say this has been great, and I've learned so much. You scared me. You made me joyful. And I'm going to go pay some bills so that they're on time. I'm very excited about this. I just want to thank you so much, not just for your time and your energy, in joining us tonight, but, for bringing us the services that you do and for also all of the support that you give us at ACR Health. We really appreciate your time tonight. I did want to thank our event committee for being online tonight. And I did want to make a big welcome to Jennifer Woodman, who sits on our board with the two boys that need to get some credit, which is great. So thank you so much for joining us, Jennifer. Tomorrow, we are going to be talking about insurance, all kinds of insurance. I think wellness, I have learned so much about the other things. It's not just about, Band-Aids and boo-boos and, going to the doctors and preventative health care. It's really about one of the things you struck on when you first came on, Andrew, was the idea of mental health and that financial piece and, knowing that you're taken care of and knowing that, if something happens to your family, if something happens to you, like a health problem, that, you're not going to go broke because you've got some kind of insurance and some kind of protection. So we hope that you will join us tomorrow night. We're going to be joined with Steve Wood, and we're going to be joined by our friends at Excelis. And we took a great trip around the Utica Zoo with Steve, who is also a zoologist. So that was a lot of fun. I want to thank everyone tonight. Please, if you have any questions, you're going to go to empowerfederalcreditunion.com, and we'll leave Andrew's McLean's email and information in our chat box. Thank you so much. Have a wonderful night, everyone.
Thank you.